Hello, good evening, everyone. Welcome to Business Live. Coming up in this bulletin, produce buying company announces a 30 million cedis financing secured to clear debt owed farmers.
If Cocoa Board is not able to meet this obligation and the farmers are suffering, then let's go out of our own way, then get some money, do our own arrangement, sort out the farmer whilst we wait for the regulator.
Also in this bulletin, government increases demand for annual gold purchase from large-scale miners to 30% to boost Bank of Ghana's reserve. We will be exploring how much of the 30% of the current output adds to the country's gross international reserves in dollar terms. Plus, Associate Professor of Finance at the University of Cape Coast Business School, Sarah Mkawa, warns of economic risks if the IMF sixth review is delayed or rejected.
That will also have a strong impact on our financial strength in terms of the forex exchange.
These and many more for you this day. Thanks so much for your time. I am Pious, Kojo Backah. A look now at our stories. The produce buying company says it has secured a financing facility backed by 30 million cedis credited cocoa stocks to pay farmers. Speaking at the signing of the Memorandum of Understanding between PBC and the Ghana National Cocoa Farmers Association, Managing Director of PBC, Seydou Nyonye, described the facility as a critical step in restoring trust among farmers and repositioning the company after years of financial difficulties.
The produce buying company says the 30 million cedis credited cocoa stocks financing facility will enable it to pay cocoa farmers promptly amid ongoing liquidity challenges within Ghana's cocoa sector. Speaking at the signing of a Memorandum of Understanding between produce buying company and Ghana National Cocoa Farmers Association, Managing Director of PBC, Seydou Nyonye, described the facility as a major intervention aimed at restoring confidence among cocoa farmers and repositioning the company after years of financial difficulties.
Looking at the time factor, the suffering of the farmers there, we felt that no, the farmer has done no wrong. It is trust. They have given us the cocoa. We have supplied to our regulator, that's Cocoa Board. If Cocoa Board is not able to meet this obligation and the farmers are suffering, then let's go out of our own way, then get some money, do our own arrangement, sort out the farmer whilst we wait for the regulator to do the needful. So it is a private arrangement. What we are looking at, we did our projections based on the margin, the returns that we are getting. Assuming Cocoa Board is going to pay us, the returns by margin we are getting. And we felt that we could part away some of our margins to augment without affecting our books. Just to support the farmers, we felt that we should spend our margin to support them, to elevate the hardship from them, because they have done no wrong. It is a relationship we are building, and we have to do as it were. So our books are not going to be affected. We are still going to be on a very same level, but our margins will be affected a little because we are absorbing that pressure.
National President of the Ghana National Cocoa Farmers Association, Stevenson Anani Boatin, said the partnership will support efforts to address major challenges confronting the cocoa sector, including smuggling and illegal mining.
This partnership with PBC is an opportunity to establish strong systems and structure that would directly support cocoa farmers and improve their welfare. For many years, the welfare of cocoa farmers, as we all know, has not received the needed attention. We are optimistic that this collaboration will create alternative and practical measures to address these long-standing concerns.
The agreement is expected to help stabilize farmer incomes at a time where the sector continues to face financing and operational pressures.
To one other big story we are following up for you, government has made a request to large-scale gold miners to increase the sale of gold from 20% to 30% to the Bank of Ghana. According to Reuters News, this is to help increase the annual output of gold purchases to boost the country's reserves. More in this report.
The move is aimed at strengthening the Bank of Ghana's reserves as gold prices soar on the international market. Government has already entered into an agreement with large-scale mining companies through the Ghana Chamber of Mines to purchase 20% of annual gold output. The decision to increase the purchase to 30% has been viewed by some analysts as a good move to support the cedi as uncertainties in the Middle East lingers, affecting global crude oil prices. The Bank of Ghana data shows that Ghana gold reserves went up to 19.2 metric tons in February this year. This supported the cedi gain some mild stability against the dollar.
Really, how does this work in practice? Let's explore that and bring in a finance person. Dr. Benjamin Amoah is a senior finance lecturer at the University of Ghana Business School. He joins us via Zoom. Thank you very much, sir, for agreeing to speak to us here on Business Live. And for purposes of education, is the government buying 30% of all gold output at market price, or is it a compulsory offtake? Who pays the miners?
Okay, so the decision by Bank of Ghana to purchase 30% goes straight into the Ghana Accelerated National Reserve Accumulation Program, the GAP policy that was introduced some few months ago. In that policy, it was stated clearly that the state, through the Ministry of Lands and Natural Resources, have a preemptive right to fall on the large-scale miners to provide some gold to support the aggressive reserve accumulation. Don't forget, that policy is hinged on two sources of gold. A chunk comes from the ASM, artisanal small-scale mining sector, and then the large-scale mining sector will also have to provide. So clearly, this strategy by Bank of Ghana is to use the policy and to use its position within the policy to acquire the reserves that we need. So strictly, it is from the GAP policy that we are seeing it being rolled out in the manner we are seeing it.
I appreciate that. But really, how much would 30% of the current output add to the country's gross international reserves in dollar terms? Is it enough to move the needle on import cover and cedi stability?
Yeah, if you go through the GAP policy, you realize that the projection by the state, that Ministry of Finance, is to move the import cover from the current 5.7-month import cover to 8.6 by the end of year 2026. And clearly, this particular gold accumulation is part of the strategy to achieve the 8.6 import month cover. The overall objective is that come 2028, end of year, we are going to have a 15-month overall import cover. So it's a gradual process, and BOG, from the look of things, is just trying to help the state achieve that 8.6 import cover as enshrined in the GAP policy document.
Dr. Amoah, BOG would need cedis to buy this gold, right? Where does the liquidity come from? Is it money printing, sterilization, or redirecting from other spending?
BOG last year bought gold, and BOG, right from when Ghana decided to use domestic gold purchase as a strategy to soar up its reserves, has been purchasing gold. So clearly, BOG, from all this period in terms of where the cedis are coming from, it's not too clear to me from where I sit. But then if BOG has been successful in purchasing gold for the past 3-4 years, then I believe that BOG has a clear cut-out strategy where it's able to get the cedis from, I don't know which particular source, but has been able to do that for the past 3 to 4 years. And that is basically what BOG is using, and not necessarily printing money to buy the gold. Because if you print the money, what you are going to do is that we are going to flood the system with too much money, and in the end, it will come back to buy two again. So I believe that they are very careful in where they get the cedis from to purchase this gold that we are talking about. I would also like to add that the miners have raised a concern. Okay, go on.
Maybe finish that for me before I come in.
Okay, the miners have raised a concern, and the miners' concern is that the 1% discount is not favorable. So it begs the question, how did BOG arrive at that 1% discount? Because in the GANRAP document, it is clearly stated that whatever discount that will be provided, the parties involved must agree and sit to discuss the discount. So if you are having the large-scale miners complaining about the 1% discount, that is appearing that the parties did not agree on the 1% discount. The document or the policy says the parties will have to agree on a discount. But here we are, one group is saying that the 1% discount is not favorable. So it appears that there has not been an agreement. And that itself is a worry, because you need the large-scale miners to agree so that they can release the gold for you. So it is something we need to look out for. And then also, we have to also still question BOG. You know, last quarter, BOG sold some gold. How BOG sold it and the issues surrounding it has not been clearly resolved. And so if we are still mobilizing and still accumulating gold, the issue is, under what conditions are we going to sell it as and when the need arises? These are some of the issues that I think that BOG will have to look at and clear the air so that we will all buy into the GANRAP policy.
All right, but on the flip side, if gold prices fall by 20% or miners cut production, what's the downside risk to this? And really, how does the Bank of Ghana unwind this policy if it doesn't work?
You know, the whole policy is so that you buy and then you sell as and when you have liquidity need for the hard currency, the dollar. If you look at the Ghana policy, there are some pricing framework around the policy that the policy is expected to use in terms of the pricing. BOG has a pricing framework, and one expects that based on the pricing framework, how much to sell the gold and how much gold sells on the international market will be used by BOG to take a decision to sell or not. But don't forget, it's all about the liquidity needs of the state at any point in time. If there is a high pressure on us as a result of increases in crude oil prices, and we need dollars, then at that point in time, BOG will have no option than to fall on the gold reserves, because this time around, we are not borrowing through the euro market to soar up the revenue. So what we have is a gold, and gold is highly marketable. So as and when there is a push on us, definitely BOG is going to liquidate it. The pricing of it, I believe at that point in time, the Ministry of Finance will have to look at it. If you want to ask me, I'll say that fine. At each point in time, BOG, when they go in to buy, they should also go into another contract to lock in the selling price. If you buy, you lock in the selling price. If you buy, you lock in the selling price. So that each point in time, they are able to lock in the selling price before gold price declines on the market.
I see. Now, tomorrow we know the MPC will announce the policy rate. What are you expecting?
I'm expecting a marginal decline, not the sharp declines we have seen in the past 3 or 4 sittings of the committee. Looking at the fact that crude oil prices have been relatively high, also inflation has seen one step increase, one expect that a marginal decline in the policy rate will work. Not more than 50 basis points will help.
All right. Thank you very much, Dr. Benjamin Amoah. I'm always delighted to have you here on Business Life. Now, the new policy coordination instrument to be signed by Government of Ghana and the International Monetary Fund is expected to support some reforms by the central bank to improve upon its liquidity as well as gold purchase program. According to the governor, Dr. Johnson Isiama, the program had come at a better time when the central bank continued with the reform processes to anchor stability of the economy. Dr. Isiama has been speaking to journalists about the benefits of the program.
It's a signaling instrument that reflects policy ownership and will be organized around 6 pillars, namely, first, sustaining growth-friendly fiscal adjustments; second, safeguarding debt sustainability; third, strengthening fiscal transparency and governance, particularly for state-owned enterprises and quasi-fiscal activities; fourth, enhancing the monetary and exchange rate policy framework; fifth, reinforcing financial sector stability; and sixth, supporting economic diversification and inclusive growth. Of particular relevance, colleagues, to the Bank of Ghana, the BCI will incorporate commitments relating to the Bank of Ghana's monetary policy framework. It will improve on the transmission mechanism. It will enhance the liquidity forecasting framework and maintain conditionality around the inflation targeting regime, with continued emphasis on forward-looking policies and the anchoring of inflation expectations. The corridor reform that has been under discussion at these meetings is directly consistent with the BCI's monetary framework pillar. The BCI will also focus on strengthening the bank's balance sheet over the medium term by limiting quasi-fiscal activities, improving transparency and oversight of the domestic gold purchase program, addressing the operational constraints relating to the DGPP and the broader foreign exchange intermediation architecture. These will be part of the reform agenda in this future engagement. Of course, the foreign exchange framework and reserve management objective will also continue to be assessed.
You're still watching Business Live. We have more for you after this break.
It's a signaling instrument.
Hello, my name is Pamela from Customer Service. Please revalidate your account by texting your Ghana card number to 0500,000 247.
Hey, Abili, wabadim.
Madam, give me the numbers behind your ATM card. I'm calling from the head office.
An email was delivered across to our customers this morning.
Confirm if this is your bank account. 100,100,100.
Thanks for sending your bank card details.
Send the OTP now to avoid cancellation.
EcoBank will never call, email, send an SMS asking for your PIN, OTP, bank card, or Ghana card details.
Don't get played. EcoBank, the Pan-African Bank.
Hello, please, I'm calling from Customer Experience Center.
From Africa to football's biggest stage, you are invited to be a part of it. Feel the rush, the passion of every moment. Don't just watch the game. Live the FIFA World Cup experience. With VIP seatings, exclusive lounges, gourmet dining, priority access at every turn, luxury all around you. Seamless, effortless, exceptional. Because this is more than a ticket. This is your FIFA World Cup 2026 experience. Brought to you by Match Experience Hospitality.
Call 055 155 1119
or visit matchexphospitality.com to secure your packages or walk into any Absa Bank branch, our official banking partner, for more information and payment.
Hello again, welcome back to Business Live. Associate Professor of Finance at the University of Cape Coast Business School, Sram Kawo, has warned that a delay on non-approval of Ghana's 6th review under the IMF Extended Credit Facility could trigger renewed pressure on the cedi, higher borrowing costs, and a loss of investor confidence. According to him, the review is critical because its approval unlocks the next tranche of IMF funding and signals to markets that Ghana is staying on course with fiscal and structural reforms. He spoke earlier on the marketplace.
If we are not able to get the approval from the IMF board, it means that the last tranche, as I have said earlier on, will not come off. We will not be able to get the last tranche of the bailout of over $300 million. Two, that will also have a strong impact on our financial strength in terms of the forex exchange, so it will put a lot of pressure on us. Three, it will also mean that we cannot go to the international financial market until we wait for 2027 before we can get to the international financial market. We are also looking for this, what do we call, the policy credibility. If we are not able to meet it, it means that it will influence our investor confidence in the international market, and that may not be so good for us as a country.
The Bank of Ghana has warned that weak legal documentation and poor risk management practices could undermine confidence in Ghana's growing financial markets if urgent steps are not taken to strengthen market systems. First Deputy Governor of the Central Bank, Dr. Zakari Mumuni, says the country's financial sector can no longer rely on informal arrangements as market transactions become more sophisticated and complex. He spoke at the BOG Frontclear Market Training Workshop on repo guidelines, GMRA and ISDA documentation.
At the Bank of Ghana Frontclear Market Training Workshop on repo guidelines, GMRA and ISDA documentation in Accra, Dr. Mumuni stressed that legal sanctity and operational discipline are now central to maintaining stability in the financial system.
The integrity of Ghana's financial markets cannot rest on informal conventions or ambiguous documentation. It must rest on legally enforceable agreements, operationally sound processes, and professionals who understand precisely what they have signed. The Bank of Ghana remains fully committed to building that foundation in partnership with all of you. We will continue to work closely with market stakeholders to strengthen infrastructure, deepen liquidity, and align our standards with international best practice.
According to the Bank of Ghana, the Global Master Repurchase Agreement, known as GMRA, helps reduce legal uncertainty by clearly outlining default procedures, margin requirement, and counterparty responsibilities.
Within the financial market, the Institute of Chartered Accountants Ghana has tabled key issues to be discussed at its annual Accountancy conference to prevent Ghana going back to the International Monetary Fund for a bailout. According to the Institute, issues of revenue enhancement and financial management by accountants can help the country have a stable economy without the IMF. More in this report.
The work is expected to keep accountants fit and enhance their health conditions as they embark on their operations to safeguard the country's economy. The program also marked the commencement of the annual Accountancy Week, which is celebrated by members nationwide. According to the Chief Executive Officer, Eric Odrosai, accountants have a key role to play in supporting the country's economic growth. He explains that critical issues that will support the economy domestically will be discussed at the conference in Ho.
Financial transparency, revenue enhancement, and expenditure management. Those are the nitty-gritty. Those are the things that we need to do. If we are able to operate within our resources, if we are able to do cost containment and reduce unnecessary expenditure, and make sure that we are able to realize or mobilize a lot of revenue, as accountants, we will be able to support in this regard. So it will be one of the discussions. How do we avoid Ghana going to the next IMF? How do we manage our resources in such a way that at all times we will float without owing? It is an important conversation that we're going to have in who. And I believe that after the whole meeting, we're going to have some policy prescriptions to government to enable us prepare ourselves as a country going forward, so we don't go back to IMF.
President of the Institute, Akufo-Addo, also commended members for their role in economic development and highlighted the importance of the program.
Beyond that, we also have to look at what we can do for the national development. There are a lot of issues in the national development, starting from revenue generation, revenue disbursement, continuing to revenue development, continuing to how our people behave. So we have to go through this process and make sure that we review our roles, our strategies, and advise government on the best way the public finance can be generated.
Yeah, the team, how significant is the team?
The team is very significant because one, there is the priority of developing the country. But when you want to develop the country, it must be premised on accountability, it must be premised on integrity, it must be premised on fairness and equity. And therefore, the team is trying to say that for the nation to grow very well, those who are in charge of governance, especially those who are in charge of disbursement and generation of public funds, will do that with the highest level of accountability, truthfulness, faithfulness, and competence. If they do that, then the best results can be achieved for the country. And that is the basis of selecting the team.
Members are being encouraged to abide by the rules and regulations of the practice in Ghana.
And that's our package by way of Business Live. But you can log on to myjoyonline.com/business for more stories. Let's see what's there. UK banking expert says banks are too profitable, proposes bank tax others. Interesting revelation there. Also on that portal, you see PBC secures 30 million cedis financing facility to pay cocoa farmers. And it was our top story here on Business Live. Also on that portal, you see gives Hales new value for money legislation, urges swift passage of procurement. Current account surplus, quarter 1, 2026, exceeds 2025 period by $652 million. More stories when you log on to myjoyonline.com/business. I am Pious Kojo Backah. Thanks so much for your company.
PM Express, power is confronted, claims are tested, and accountability is not optional.
The first 2 months in office between January, February, and March, we had already brought down these rates, and then we have sustained it since.
Politics, business, the economy, social justice. If it affects your life, it will be examined. If it shapes your future, it will be interrogated.
You ever sitting there today and you see me sweating, I'm answering your question, you in the comfort of your chair putting all these questions to me. That is why you would not have the responsibility of bringing about this document.
No safe spaces for evasion, no comfort in half-truths, just facts, pressure, and the courage to stay with the question until the answer comes.
Your word says, my words were those on Compact Plus. You pay $500